Hello everybody, this video is a follow-up to several videos I have made in the past few months in which I have discussed the many bullish factors for gold as well as precious metals as a whole. Since then, however, the price of gold and silver have corrected back to the lows in March earlier this year, and sentiment is at near those lows as well. So many investors are throwing in the towel, and there is just very little mainstream optimism regarding gold and silver right now. So today I intend to discuss the likely causes as to why precious metals have corrected and whether they are likely to continue correcting or head higher from here, in my opinion. So to first examine the causes of precious metals and why they corrected, I first need to look at why gold and silver began rallying back in the early summer from roughly April through mid-June. And the major driving factor behind this rally was concerns of inflation going higher, and inflation running out of the Fed's control, essentially, out of the ballpark range where the Fed would prefer inflation to be. So looking back at roughly April and May, inflation was on the top or very near to the top of the list of concerns for investors. And as can be seen from past periods of high inflation, where inflation has run much hotter than the Fed would like, and when inflation has definitely gotten out of their control, the Fed has always played a chasing game with the problem, and they've always raised interest rates much more slowly and much too slowly to catch up with the inflation. So what has this caused, with real yields? Well, it sent them into negative territory, and it is when you have these real yields and real yields at a very negative rate of return, it is that when you under these circumstances when you have a very bullish situation for gold. And by the way, real yields is just the rate of return minus the rate of inflation. So it is in this circumstance when gold and precious metals have outperformed pretty much everything else in the past. So in light of this fear of rising inflation and the Fed essentially being very reluctant to raise rates, it is somewhat confusing as to where the sentiment shifted. Why did they lose that concern? And I'm not blaming everyday consumers at all, because it is people like them who have definitely seen the full and ongoing effects of inflation, even right now, in food prices and living expenses and shipping delays and labor shortages, and the list goes on, just as how evident it has been for just everyday people. So the consumer has definitely not lost sight of inflation as a concern, and in fact, inflation has pretty much always been at the top of the list in terms of concerns for everyday people in the last 6 months or so. But the market clearly lost touch of this reality, which is typical, to have a disconnect between Wall Street and Main Street. And in large part, this was probably due to the correction on long-term rates, which roughly coincided with the correction of gold and silver. The 10-year, for example, fell from a high of roughly 175 to a low of around 115, which occurred just recently. And this, in large part, I believe, is what caught Wall Street off guard. Back in April, for example, when rates were still rallying and they were topping out, in hindsight, we can see they were topping out then. Concerns were growing around whether this would cause growth stocks to begin correcting. And this is when the sentiment really began shifting to being bullish for gold and silver. Very few people were expecting rates to correct lower also. I was actually one of the few who did expect them to fall at that time, as can be seen in my most recent video, which I made regarding Michael Burry's portfolio back then, just with regards to Burry taking a position, essentially going long bond yields and short bond prices. And I said that while this did work out during the first quarter of 2021, that I expected bond yields to consolidate. And this was simply due just to the tendency and almost clockwork of markets to never move in a straight line. Even if the fundamentals are there for what should be a straight line move from point A to B, in reality the market usually has different periods of movement in one direction, and then consolidating and correcting back towards where it came from before another leg in the same direction the fundamentals dictate. All that being said, rates did correct lower than I expected. However, I do expect this to change very soon, if not already being underway. I do expect inflation to become the key concern that it was earlier this year, and I do expect Wall Street to see this fairly soon. It is undeniable that some of the most recent CPI data that has come out has been far higher than what Wall Street was predicting, and I do expect this to continue in the coming months. Now, as a result of this rising anticipation of inflation and negative real rates, I do expect rates to begin heading higher again, but I also do expect gold and silver to regain their place in the spotlight, and as a result of this growing fear of inflation. So to summarize my thoughts, here they are, that gold and silver are not done rallying yet, and if anything, I was probably just a few months early on the real rally starting. The reason for the temporary disconnect between rising inflation and the price of precious metals has been the market second-guessing whether this would be a lasting or if inflation would indeed be transitory, which I do not expect to be the case, and I don't think anybody else really does either. All of this being said, I'm not attempting to provide financial advice in this video. I'm just addressing some obvious questions that would result from past videos I've made as to whether or not my opinion is still the same, as to whether or not I'm still as bullish on gold and silver as I was then. To put it shortly, yes, I am very optimistic on them. I think it has just been delayed by a few months because of bond yields. So all that being said, on this channel, The Contrarian, I talk about the markets, the economy, and investing based off of the fundamentals and what the real reality of the market is. And I tend to ignore, if not go against, the common consensus view just because the market as a whole tends to almost always be wrong. So that being said, if you like this video, just consider subscribing, and I hope to see you again at some point.